Good Sunday morning, good peoples and my friends. All right, let's jump into Group C, Yield Max. I'm going to try and keep this positive, but I'm still going to call out things as I see them, guys, because I think my expertise, my knowledge, my skills is what really separates this. So, um, anybody can guess what they're going to be, and then overall in the markets. So, let's take care of some of this housework. Well, that's not really working. Why is that not working? That's not positive. Oh, I know what's happening. All right, got to do it on yellow. Duh. All right, guys, because I like to do them one by one instead of just have them all up there. All right, let's start with Coney. Coney really had been the leader, is not really the leader anymore. I think it's more like Hood. And then really some of the weeklies, when you look at that, I think people are still like Ulti. So we shall see. All right, guys. So Coney, what did our friends Coney do? Well, let's take a look. Let me show you. First off, they earned no money really on their weeklies. They were losing money on their weeklies in their total. So, how about what they had in their active synthetic? Again, not closed, boys and girls, just what the value is if they had to close it, right? As of last Friday. And then, by the way, let's jump to one other sheet here. On this one, I want to remind everybody of the dates. Most of you know, right? So here we are on Sunday, the 14th, and then you have Monday, the 15th, 16th. We'll get the actuals declared pre-market on 17. So that's when, sorry, on 19, right? 15, sorry, guys, I really screwed this up. So it is 17. Glad I went over it. So Wednesday, the 17th, which is also the FOMC. So declare, not December, declare on the 17th. Ex dividend then becomes the 18th. So if you like something and you want to buy it and don't already own it, make sure you buy it on the 17th after you know, quote, the declaration. If you already own it, hold it through, right? So then the 19th, next Friday, coming Friday becomes your pay date. So all of this is the week of 15 starting tomorrow, right? You got Monday, Tuesday, then Wednesday. And by the way, guys, if you're not aware, this should be one heck of a volatile day on Wednesday. I expect I don't know what I expect. I expect a surprise. So 50 points, if we get 50 points, I think we could see a big rally initially and then turn and be a sell off. So to me, the key is volatility. If we get 25%, 25-cent um, interest rate cut, I think we just start selling off like, hey, that's not enough. So, regardless, I think this becomes a pivotal 17th day in the market. It could jet now. Could it just melt up? Could it be the 50-point rate cut and we just melt up all day Wednesday, maybe go up half of Thursday, end of Friday, and then start to sell off and the following week really go down? Yeah, look, I'm not trying to predict the future, but I am telling you that I think in particular, this FOMC and this rate cut, there will be a rate cut. 25 or 50 makes a big difference, and the verbiage, right? The guidance on what gets said. So, having said that, let's get back into this. But don't minimize that in any way, shape, or form, the volatility, guys. So, what do we have for an estimate on Coney? They didn't make any money. Where is their sheet, which I started to show you? I got so many of these MFSO. There it is. So not much, guys. They have a profit of 6 cents on their 1017 320 call and put synthetic. 6 cents, that's nothing. They have 22-cent profit if they took it right now as of last Friday on their 300. Okay. So they have less contracts, but that would be an older one. Okay. But I say older, not necessarily, so it's come back. This is a newer dated one that, and I really meant to say lower value. This one is a longer dated one when the fund was higher. All right. So 6 cents and 22 cents. So what do I think they're going to pay? Now I'm done with looking at that data. All right, let's take a look, guys. 35.5 cents. Now, what did they do? A couple of other things I take into consideration here. Okay. The previous price was 707 back on the 19th of August. So fast forward to, and remember what happens when I do these things, I do them on Sunday. Then when they declare, I do another video and I change the price to the declaration date. So this 12th was last Friday. This new date will be 17, right? 28 days, right? Every 28 days is when these things pay. It's not technically monthly. We call it monthly. It's certainly more of a monthly than it is a weekly or a daily. It's just the technicality of being 28 days makes them 13 payments in the year, right? So you'll end up with a May payment twice, and different groups find out that they have different double month payment. You only have 1 month of that year, and it's not going to be February. Okay, that will pay you twice. But I'd rather just say to you, you get paid every 28 days. Because when somebody said, oh, I'm paid twice this month, yeah, it's like the 2nd and the 30th, right? Or the 1st and the 29th. It's still 28 days apart. They just happen to fall in to a month. So it can be very misleading words. All right, 35 cents. Fiat, the inverse. Well, and by the way, so up 1.13, not a lot. Okay. But over here, remember when Coney moves down, theoretically fiat moves up, right? They're an inverse, right? One sells puts, one buys puts. There's all of the different, one sells calls, one buys calls. And so the strategy is an inverse strategy. But they don't always work 100% in that direction. Otherwise, it'd be perfect protection. And it just doesn't work out, right? Flat kind of mixes them up. They both go down in a flat environment. All right. So what did I have for fiat? Well, fiat actually earned a significant amount. Paper value. Okay. When I say earned, it's there. It hasn't been closed out of upward of like 70 cents. So we're talking that they have some money to pay, but that doesn't always matter. They're going to try and pay anyway. All right, Bruce, get to your number. Oops, not going to get there that way. All right, 22 cents. Paid 26 last time. Now, this is ugly, right? They were down 16.28. They went from 344 to 288. Coney had gone from 707 to 715, but I have them barely paying any more money than they paid last month. Certainly not the 79, the 53. But again, could they pay that? Absolutely. It's still, to me, if I look at all of the funds, remembering YieldMax since the beginning, there are 3 funds that have paid you all your money back since inception. Well, when you start at $50, it becomes harder. Coney, Nvidia, and Misty have all paid you back if you bought on the first day or even probably the first month. Okay, because they were all in the $20, right? Now Misty moved up. A lot of them started then moving up. I mean, Misty a month and a half later was $40 after starting at 20. And then it was paying 2, 3, and $4, right? So that's why it got home in 8.3 months for Misty to pay you back. Tell me what Misty's been doing for you lately. Absolutely nothing, right? Yomax doesn't want it to pay below a dollar. Is it earning a dollar? Hell no. Should it be paying a dollar? Hell no. But it is because it's their asset under management leader, although that is declining. Okay. But they don't want it to decline. When you hang your hat on Misty, anyone ever care to go out on YouTube and count the videos that say retire on Misty? Probably some people have done that 70 times. And then if you add up all the YouTubers, if I wanted to get 5,000 views or 10,000 views on a video instead of 2,000 or 3,000, I just make it about Misty. But I don't do that. Okay. Fanboys do that, and other people do that. And, Ulti's the new Misty, and then Salty will become when the markets start to crash, if and when the markets start to crash, not predicting, okay, then maybe Salty becomes the new Ulti. So, because Ulti's not really doing that particularly well right now. Still paying. Remember, in a yield fund, you can pay a lot, right? But you might as well be, I have to come up with a new name. I have to figure out a new name. I'm going to rename it, not tonight. Okay. So MSFO, what are they going to pay people? Well, let's find out. I got them at 30 cents. So what did they earn? Not much, but better than some. I got their paper value profit on their synthetic 1017 500. This is their call, 2,860. They buy that, they go long the call, they sell short the put. Both bullish bets. And at this point, they've earned 41 cents with it not expiring for another 30 ish days. But again, they're not selling that. Right? Not a lot of money. It's no guarantee. If the market went south in 2 days, that could just disappear and be a loss. So they don't really pay onto that, but they do take it into consideration. How could you not? Right? It's the closest thing to having a profit. They, let me look, did not really earn any money on their weeklies. You tend to, those are your two places to make income. You can make outstanding income, and they're sort of forced to pay you some percentage of that income. All right. So what do I have? I have 30 cents, guys. Down, but again, so what are the three factors involved in trying to look at that? What's the current IV? Because if they got nothing else, they try and do the IV. But I don't even buy that. I've seen many cases where they simply don't. But I've got fiat paying, 99.31% on its yield. And yet it went down here, but it closed out some good profits, which you can in a declining environment. All right. So MSFO, 2%. I mean, Coney was up 1%. They're down 2%. So I knocked a penny off, 1.7. All right, let's move on. AMD did not have a very good month. I believe AMD is negative over here. Nope, I take it back. Nothing to write home about. 24 cents is what the spread on their synthetic, right? Here's what the call is worth, $15, 15.65. The puts are worth 10.71. But they would sell these and they would have to buy these back, and the difference is almost 6 million when you divide it by the 24 million 24.5 million shares outstanding. then it's only 24 cents. So not a lot, guys. And what else did they do? They picked up about 12 cents. So between that, I can't pay them 54 cents again because, I mean, I can't guess them to be paid that because they went down 939. They went from 852 down to 772. So let's see what the math tells us. Whew! Yeah, I gotta double check that. Do I want it to be that ugly? What if I made it 29? Yeah. Well, look at here, guys. March and April. That's all right. I don't mind. Netflix, another one that I was just saying in recessionary data, I saw a little swing up in the Roundhill funds on their NFLW. And I said, oh, it's finally catching hold that we're sort of in a recession with the jobs data, and Netflix should pick up. More people are spending more time at home and not going out and spending money. So if you're home more and you're watching more Netflix, subscriptions are going to grow to some degree. And that's simply how the math, but that's not panning out here. They're weekly and they're picking up. That's why I don't like the monthly funds anymore, guys. When there is a weekly that's the same fund, different strategy. They're using leverage at Roundhill, so when it's running, you can capture more, right? I mean, there's just, in my opinion, there's nothing to be said for being in any yield max monthly fund when that same fund is offered with leverage. Now, if you said to me, hey, in a bear market, they're going to go down harder and faster on their swaps because they're going to continue the leverage. If they continue the leverage, that is a true statement. But let me ask you, why on earth would you buy a fund that you're bearish on? You never want to be bearish because then the difference becomes Yomax goes down 95% and Roundhill goes down 125%. So you lost more. But guess what? Both of them you lost money. One just made you lose more money. So that rationale in saying, oh, I don't like the leverage, it's going to hurt me on the downside more, doesn't fly with me. It doesn't resonate. I want it on the up, but I'll be honest with you. As I've done these now for 2 years, and I've said that to you guys, I almost feel sorry for someone who has to be in these. If you have to be in them, then they're brutal. It's no different than trading stocks and being a day trader. You've got to find a position where you can get in at a low price and get out and replicate that. Okay. And here, I have people all the time say, well, it's not that difficult. I DCAN, I time, but that's not the average income guy. You guys tell me, a lot of you are busy. You're working your job. You maybe have a second job you're keeping from a third job because you've deployed some funds to give you income. So you want to park it and forget it. You want to look at it weekly, right? And on these monthlies, you want to check and see what the price is once a week or whatever. But you really want to find out what it's going to pay you once a month. Well, guys, that's brutal when you can get that fund on a week and you know when it's going good, you got to wait a month to find out if Yield Max pays you, but Roundhill tells you what's going on within that week. So again, it's not even stuff I foresaw. It's just, if the only fund that I absolutely say I'm in at Yield Max that they don't have yet at Roundhill is GDXY. But my percentage in it's 300 shares. I've owned it since it came out, right? The $20 level, I'm ahead of the game because it's up in the mid 16s. And I think GDX has got 3x to go. My real money deployed is in the growth side. or leaps, all kinds of things related to GDX and the miners. And those of you that follow me on Patreon know that, right? So just having a tiny fraction in Yale Max is like, okay, well, somebody give me a better, and there are starting to be SLJY. If you want a really good fund, it's monthly also. I wish it wasn't, but it's on silver miners, and silver miners will outperform gold miners over this ensuing next few years because silver should move up a percentage greater than gold. Not all the time. Somebody can show me a 3-week period and say, hey, gold outperformed silver. But silver is playing catch up and will outperform. So just giving you, my feedback on all this stuff. So Netflix, guys, what's it doing? So I dropped them to 41 because they went down 4.91. They did not make any money. Okay, I'm looking at my notes. Yeah, and then what do I have them in and my sheet? A couple of these I did when I can look real quick and see that they're negative, but I still do them. Why is that one keep coming up? I must have named Hui Netflix. I apologize, guys. Oh, I got two Huis. Did I overlay that somehow? Yeah, oh, there we go. There's that. God, guys, sorry. I was looking at my second monitor. I kept clicking on Netflix and I kept seeing Hui. Okay, so 85 cents, guys. They didn't make any money on their weekly and they didn't make any money here. But Yomax is going to, ROC you. They're going to return capital. They're not going to have an income fund that doesn't pay anything. But man, oh man, is it going to continue nav eroding in that situation? All right. 25 cents for ABNY. So I just wanted to show you here that I hadn't shown you the Netflix data. A lot of times I don't do these because I can look up here on the sheet and I can see when one number, when the call number is smaller than the put number, the value. There's no sense in doing it, but I did it anyhow. All right, let's close this one. Keep going. All right, 25 cents. So you guys can see the current yield. This is accurate based on this new September last Friday close. All right, PP. Not good on PP. Down 521. That was down 554. That was down 491. I mean, this is just pretty brutally ugly here, guys. This green doesn't matter. What matters is whether this is green or red, and then if this is green or red. You see, as down here when we get into Lefichi Kapudi, S Diddy, Q Diddy, and they're up. Any up is okay. Not when you're trending down, which look at all these monthlies. The only monthly, well, I take it back. Actually, these two monthlies are down too. So the only monthly out of all of it, and I barely have them paying more than they just paid. It's still a decent yield because just the damn stock's at $7. But got to be frustrating to people. It's not frustrating if you bought all of your shares on the opening day at 20. It's not frustrating at all because in 13 months, 14 months, you got all your money back in Coney. I get that, right? But I don't know that that's the best investment for. Do you want to write it down to $2 or is it going back to 30? It's hard to get super bullish, although I'm bullish on BTC still. But we'll see. Is that a delayed? Is it not going to run till later this year? I don't know. So some of these monthlies are just brutal. They're easier for a weekly fund to change, harder for a monthly fund to change. And it's not like these stock prices in the market index averages are near tops. They're not at tops. Well, the S&P is very close. The Nasdaq a little less so. All right, guys. So I'm just going to run through more faster now. Let's do PP and Carvani at the same time. 27.50. So I got it down quite a ways. Now, Carvani is only down 1.32, but I did drop. And this is a hard one. This thing could be a $1.30 to $2, to be honest. But let me see on my other notes. I got them only making on their weeklies about 19 cents. Let's see, what did I have them on their synthetic? Their synthetic is at minus $1.91, guys. Calls 14 and the puts 31. That's not pretty. That's why I dropped them. And I dropped them pretty significant, 255 down to around 155. All right, guys. And then I had PP at 27.50. All right, let's go through here. Let's do Ulti. 095, guys. I think they're in that range. It's actually, now this was good for a while. But when I added my 1,000 shares, I think it was 627. Look at that. That's 70 cents, and it was about 6 or 7 weeks ago. So if they paid me 10 cents a week, I'm dead break even. I don't invest to break even. But I like to have a little bit. I said, okay, if they're going to keep paying 80 cents and it's flat, I don't expect it to go up much. But if it's declining on average 10 cents a week and paying you 10 cents, then what's the purpose? So there's some real comeuppance when your king is no longer your king, right? Because Ulti was kind of the new king. I know what people will say, oh, Bruce, I time it. Well, then you're trading. You're not really an income fund. Why don't you just trade stocks without being an income fund? Or why don't you be in a sector like precious metals and commodities, which is what I do over on Patreon. And we've got a lot of winners. I don't know anybody that's bought a stock there that isn't up 20 to 50% in a month or two. I've got 400, 500% baggers, since the beginning of the year in a few cases. And it's not just the precious. They're running right now. How about uranium? How about agriculture? I'm going to do a video on agriculture for my Patreon. What agriculture funds? I mean, you can play commodities, but if you just want to buy some ETFs around those, I'm going to tell my people what to buy there. That should be a good 30 to 40% pop. So, I just don't understand income funds when they stop being really good income funds. Any bull market, and why do you think I bring up commodity? Because that is running and will run, guys. You have to time these sectors, and when they get hot, I get in them early. So when they run, that's why I got some 400 and 500% returns on my miners, because now that silver's breaking out, gold's already breaking out, constant new highs, right? So the gold miners that you bought 4 months ago are up 150% because people are starting to see it's a very small sector, guys. When 1/2 of 1% of the money in a single Mag 7 stock shifts and says, oh, I'm not chasing the Mag 7 anymore. That's not where everything's happening. Those aren't going to double and triple. And you go into gold and silver miners. Why? Because they're like printing money, right? Look at the silver price. Look at the gold price. We consume silver. You need silver in a million things. Gold is just a fear factor. It's just, something that's always maintained its value versus paper money. Silver actually gets utilized in industry. So if we go too deep of a recession and you want to look at silver, you say, oh, silver prices are going to go down, but we're in a 4-year deficit. we can't even supply the industrial amount of silver that we need for solar panels and electric vehicles and mobile phones and computers and its conductivity and other things that it's just needed for in industry. So we're in a 4-year deficit. So that alone would drive the price up, let alone as a proxy for gold. It's a poor man's gold. Who can afford to buy hundreds of ounces of gold when it's $3,650? Well, how about when it's 5,000 or 10,000? Wait till silver is $200. And then somebody that's digging it out of the ground that it cost them $20. Well, it's 40 now. They're starting to make a good profit. What kind of profit are they going to make when it's $100? So it's no different. It's called earnings, and that's what Wall Street's about, and they can't ignore it. And that's why these things move up, not because it's a frenzy, but money moving into them is just a recognition. They should have been moving up a year and a half ago, but no money was moving into them because everybody was FOMOing into AI and the Mag 7 and everything else, even though the metal, gold was smelling, central banks knew that gold was real money. And so gold was going up and up, and the miners weren't. And even I was frustrated. But then I just remember every single commodity cycle, that's generally what happens. They can lag 6 months, 12 months, 18 months. It was more like an 18-month lag here. But now that it's running, sometimes the silver miners, they're getting a little bit frothy and a little bit toppy. But so what? We get a 15% pullback and then run up another 150 to 200%. So that's why I talk about where, and I try and educate you guys on these income funds, okay? That don't just chase that, right? If you flop around to who's paying the most, is it Hui? Is it SMCY? Is it Misty, right? Is it NVIDIA? You're just going to lose your money just chasing that stuff all the time. Get into something that's going to go up. All right, guys, I'm going to load you up here. I've gotten off. I got on my rants, and I love them. All right, guys, 14.50 for YMAC, 16 cents for YMAG, 38 for Robert Diddy, R Diddy, Leffigy 42, 31 for S Diddy, 17 for S Diddy. Q Diddy, 19 and a half pennies. Chippy, 3850.3850. All right, guys, I know you care about these. And I did all of my monthlies except for Hui and Dre. And here's what I got for you. You're going to like this one, guys. And let me tell you why. I have 502. So they paid $3. They paid $6.53. They paid $6.89, $3.85, and yet they're trending down. But they made some money, and on top of making some money, they have 611 in, again, not sold, not booked, not closed, paper value. You know, if I've got 1 million shares of Microsoft and they're worth $35, then I've got 35 million in Microsoft stock. That's exactly what my Microsoft stock is worth if it closed on Friday. Now, is it going to open up and go down to 34? And I went from 35 million to 34 million. What if it goes up $1? I'm at 36 million. So it's no different. That's how all these work, right? Based on what the underlying hood is doing. It drives these things up and down. But they're probably not going to close them, right? They got a month out there. But it matters when they have other money to say, hey, we want to reward these people. And they reward different ones. When you got a whole bunch of losing stocks and you don't have anybody that's really outstanding in payment, you want to have something. So I got it at 502. They could pay higher. And again, it's still down. I don't even know. How high did it get here? 65.72. It's not that far down. Very volatile, guys, and that helps. All right, let's look at DraftKings. DraftKings is ugly. I'm going to tell you right now. I pulled up, again, another negative synthetic. But that's not the entire story. Here is DraftKings. Oh, I should have made this red like the other. Lost 67 cents. So that kind of sucks. But they always pay these funds. That's the difference, right? They're going to pay them something. And what are they going to pay them? They're down $2.41, 4.6%. All right. I have them paying 166. Paid 219 last time, guys. DraftKings. All right, so I got this. I got a total of 1096 from 1123. That's what I mean by this stuff's trending down. And yet, you're near highs. What happens if this market sells off 15% this week? Now you're down more and your earnings are down and you took a big hit to that. So, are you in anything else? So if you guys have any interest, I'll write it one more time. I'm not trying to sell what I do, but we are making a lot of money and we are having fun. So come over and take a look. There's a little bit of content for free, but most of it it's not expensive, guys. Starts at $5 a month. TWC. But I show what I'm buying, why I'm buying it. Okay. And you know what? I was doing, go back and look for you guys. You don't even have to go to Pinterest. Go back and look at my May and June. Go out to my channel if you're interested, okay? If you're saying, hey, maybe I'm missing something in these commodities. What does it mean that gold's setting new records and central banks are buying it and there's very little downside to gold? Now silver's caught the run and starting to go up. It's that commodity that's needed in industry for everything, but is a proxy for gold because people can't afford 3,650 if they want to go buy an ounce. They can go buy an ounce of silver for $42. So, and yet it has a store of value. That's why they stopped putting it in the coinage, right? The pre-65 coins that we have in the US had a big percentage of silver in them. And so they stopped doing that because metals are scarce, right? You got to dig them out of the ground. There's labor associated with that. You got to find it, you got to process it. And, these things get consumed. Gold doesn't really get consumed, but it's that fear trade. It's that I got it. It's always been, so many ounces of gold buy a house in the world, wherever you are. So many ounces of gold buy a man's suit, right? Well, it wouldn't even be 1 ounce, right? But some fraction of an ounce of gold. And if you go back historically, what about paper money? Can you say that? Can you go out? Yeah, some amount of paper money buys a suit, a good man suit, like on a Seville Row or something like that, 800, 1,000, $1,200, $1,500, right? But that's gone up, right? So if you went back 30 years, you say, well, that's $400. Well, gold was probably $400. I mean, it depends. And so you have those kinds of things that don't change. They just print more paper and the paper becomes, we hear that all the time, and we're in that debt cycle right now, guys. So, anyway, that's what I talk about over here. But if you want to learn something while it's still free, I can't take it down. Well, I could, but I won't. Go back and look at my playlist. I have one playlist in my entire channel, and it's precious metals and miners. There's about 11 or 12 videos. And most of those started back in May or June. I get 300, maybe 800 viewers. I do another video, I get 3 or 4,000. So I hated doing them because I didn't earn anything for the effort, but I knew they were valuable, right? And I went out and I gave sample portfolios and I gave things that you could buy, right? And then I did them in May and I did them in June and I did them in July. Go back and look at where those are when I was telling people they should look at. Of course, they're not popular because you guys are FOMOing into all the stuff that's topping and is about to probably go down a lot. Okay. Now, again, could they melt up for another 3 months, another 20? You bet. I'm not trying to forecast to a day. I'm trying to tell you medium and longer term trends. Okay. But I've already proved up on my commodity side on gold and silver and all the miners and why you need to be in them. Okay. Yeah. And guess what? 6 months or a year from now, there'll be a ton of ETFs on income around them also. But you don't really have to wait. By the time you move into them, GDX will be 1.5 to 2 times where it's already at right now. Now, people say to me all the time, do I recommend GDX? Not really. Or, sorry, GDXY. Not really, because it's a poor man's fake. It's a fake GDX. Just go buy the real thing. Go buy GDX, right? You're up 90% or something year to date. But you mess around with GDXY and you get 35%, you get 35% total return. It's like a fraction. I know the underlying doesn't, you're always talking about the underlying outperforming. Well, it's just stupidity to put a whole bunch of money in that. But I can say this over this period of time, in 2 years from now, if they don't change how they're doing it, GDXY should be higher. Is it going to double and triple like GDX is? No, it's not, because it can't capture that on the upside. But at least it isn't going to go down to, $5 like so many of their other funds are. All right, guys. But when you find a good one that's using leverage on the upside and paying, like I said, go look at SLJY from Amplify. It's a silver oriented fund. It pays monthly. They're saving room with the calls for some on the upside. My guess is in 2 to 3 years, that's a fantastic fund. It's not going to pay you a ton of money, but you're going to get growth and you're going to get, I think it may even be a targeted one. Don't hold me to that. It may be a 20 or 30% targeted, might even be 18%. I look at so many of these. All right, guys, I'm going to let you go. This is long in the wind already. Most of you are gone that don't care about this stuff. But take a look at that playlist. It's for free. But that isn't going to tell you what I've switched to. Okay. Have I sold some of those? Yes. Do I have a different view on some of them? Yes. Okay. Are they maybe overvalued in some of them? Possibly. I'm not going to tell you all that. Come join Patreon and see. But the point is, it just shows you that I was right. And most of the time I am about the markets, okay? I'm not a seer. I don't have a fantastic crystal ball. But 45 years of being in the market, studying history, subscribing to cycle guys and so much other stuff, technical analysis, Fibonacci to the nth degree, I have my hand on where money is moving. And where money is moving is where things go up. And when I see a sector pretty toppy, now AI is not done. We're going to have a lot more AI before it's all said and done. But it's kind of like .com. .com died in 99, guys. But it didn't really die, did it? It's just all that euphoria and all that fake.com. All that eyeballs is all that matter. They don't have to have any money, and every, 30 different flavors of pets.com. It all died. Okay. Amazon. It took the NASDAQ 15 years to get back to 5,000. Okay. It crashed 92%, I think, at the low. And that could be, I don't know. Maybe we get a 30% pullback in the market in AI and FOMO and the megs, and that's all it needs, and it continues along. But it's not going to go out and do in the rearview mirror what it's done the last 5 years and the next 5 years. That doesn't mean a few select companies that get it right in AI aren't going to do really, really well. But I'm talking about just the overall FOMO. All you had to do was be in the NASDAQ to make money. You look at what the new leaders are going to be in the S&P 500, you already have Newmont Mining, the world's largest gold mining company, was between number 2 and number 3, up 92%, up 102% on the year. Depends on which day and when you're looking at it. All right, guys, done with my rant. This is Bruce with Financial. This is Bruce with Targeted Wealth Creation. I'm not a financial advisor, and this is not financial advice. All right, guys, have a good one. Bye for now.